Good day. Today is July 5th, 2025, and I would like to talk about combining momentum, mean reversion, and seasonality. Before we start, please note that there is no investment advice in this video and all results are hypothetical. Let's move to the first slide. You see frequently references to combinations of momentum and mean reversion to capture alpha in the markets, but references to seasonality are not very frequent, but this is a very important dynamic, and it has to do with mostly with calendar effects. And what's happening is that the correlation with the stock market and most of the markets is very low, the seasonality correlation. So this is another third dynamic we can use to create diversified strategy ensembles. Momentum captures the divergent price action. Mean reversion captures the convergent price action. I would like to emphasize here that there are many different types of mean reversion. We focus here on reversion to some trend. Many other types of mean reversion, or reversion to an indicator, reversion to some mean, statistical arbitrage. I have an article on the blog about these different, I think there are 7 or 8 different types of mean reversion. And then we have seasonality, which mostly exploits calendar effects. But seasonality is tricky. Sometimes it's highly non-stationary. Seasonality effects may appear and disappear abruptly. So when you use a seasonality strategy, you have to make sure there is an underlying cause, a sound theory, a sound hypothesis why this should work. And this is what we do here in this presentation, in this ensemble. Let's start with momentum. This is our MOM strategy with SPY, diamonds, gold, and TLT ETFs. This has been a very good strategy with a Sharpe ratio of 1.2, annualized return of 10.7, beta is 0.32, and we only see the strategy struggled in 2022 because both momentum and mean reversion, they struggled. Momentum struggled because of reversions to the mean, but also mean reversions struggled because those reversions to the mean, they didn't last long enough to generate profits. Year to date, about 16.6% to the end of this week, July 3rd, 2025. Maximum drawdown is 16.5%. So this is the momentum strategy we use. We try to take advantage of momentum dynamic in price action for these ETFs. The mean reversion strategy, we call it ETFMR with SPY and QQQ ETFs. This has been a fantastic strategy. but slightly higher drawdown. The annualized return has been 10%. Sharp has been 0.81 because of the higher volatility, and beta is 0.44. Year to date, about 13%. This strategy takes advantage of reversion to the trend or convergent action. Very nice strategy, and all the strategies we discuss here are very simple and they are easy to implement. Now, for seasonality, we use a leveraged ETF that is not related to any equity index, and this has been a surprising, well-performing strategy. No losing year since 2010, sharp 0.92, maximum drawdown 21.3%, annualized return 14%. Beta is basically zero. So this has no correlation with the market. This is a nice strategy. The underlying hypothesis is sound. It's not a data mined seasonality strategy that you mostly run across in various blogs or posts on social media. There is a reason that this works, but of course we don't know if it's going to work in the future. Now, what we do next, we combine this in an example with equal allocation. MRMOM should be here, MRMOM, it's a type, ETFMR and ETFMO. This had only one slightly down year in back tests. Year to date, 14.5%, unleveraged, 12.3 annualized return, very low drawdown, 11.3%. Sharp ratio is about 1.5, excellent sharp ratio, and beta is less than 0.2%. So this is what you get when you combine these three strategies. And this is the objective, to get alpha. The risk-adjusted alpha is more than 6% here, and this is basically what most traders are looking for, a sample that generates trades with basically as close to possible distribution of an annualized returns to normal. So this is the idea. You can find more information about the Dynamic 3 bundle. This link here is the website URL. For those who haven't subscribed, there is a free introductory book, Profitability and Systematic Trading. If you subscribe, you get the PDF of the book that was published by Willie in 2008. And here are some information of how to contact me, and also social media and YouTube channels. And if you like this video, please hit the like button and subscribe. And let me know what you think in the comment section. Thank you for watching. Have a nice day.